going on, everybody? This is Lucci here with another episode of Wall Street Porn. Today's episode will be on Netflix. Now, I like to do this series to showcase some of the crazy money that can be made in this market. It's not necessarily that easy to make it, but it's there nonetheless. So let's go ahead and drill down on Netflix. Right here we have a chart of the last year or so in the action in Netflix. As you can see, the stock went from $60, this was in the beginning of 2010, to a high yesterday of $220. Now, obviously that is quite ridiculous in and of itself. Netflix is a company that everybody seems to want in and everybody wants to use. So therefore, you have a pretty wild stock. Right here is last month's action in Netflix. Now, one thing I wanted to point out was that end of January, he had an earnings call. A lot of people were short this stock, meaning they were betting on prices to go down. Before the earnings call came out after the close January 26th, and the stock was up like 30 points off of that call. So a lot of people got screwed on that move. The stock kind of consolidated for the last week or so, and yesterday just broke out once again. So let's take a look at yesterday's action, okay? So it opened at 213, tanked a point, and then just ripped the rest of the day all the way to 221. Now, the way to play this stock was in the weekly options, the 215 weekly call or the 220 weekly call. So let's go ahead and take a look at one of those. Right up here is the action in the 220 weekly call. Now remember, these weekly calls, they have an expiration every single Friday. Again, if you don't understand too much about the weekly options, go back in some of my previous videos where I explain them in a little bit more detail. But anyways, this option in particular expired, I should say, yesterday. Okay, so one thing I did want to point out was that it opened at a low of 7 cents and it had a high of $1.67. So obviously you see the potential here for opportunity. However, the reason why it was 7 cents off the open, let's take a look at this chart back below. You have a stock that's $212 or $213, and you have an option with a strike price of $220. That expires that same day. So clearly, people ain't trying to pay up for something that's 8 points away from happening. Okay, so this stock has to go above $221 or somewhere close to it in order to make money on this option at all. As you can see, it did, and hence why there was opportunities. Okay, so we're going to showcase one of the trades that was made by one of the guys in our live chat room. His name is Joshua M1. He bought this option pretty much right before the initial spike up here. Actually, during it. He bought at 27 cents. And he ended up selling at right below $1. It was right around here. This was when the stock was about to break 220, couldn't do it, and then dropped back. So this is where he bought. This is where he sold it at around 91 cents. So again, he bought 27 cents and sold 91 cents. There was a lot of different ways you could have played this thing, but that was obviously one of them. However, what I wanted to point out was how difficult of a hold it was. Okay, so where he bought at 27 cents, if you take a look back down on the chart here, you buy somewhere along here. As soon as he makes this high, the option hits a high real quickly of like 70 cents. So you could have sold right there. You buy 27 cents, you limit out 60, you make double your money right there. So these are kind of the decisions you have to make while being in one of these crazy weekly options. Now, take a look back at the chart here. During this consolidation period, the option kind of sat around, 40 cents all the way up to 60. So it went from in that range for a while before it started breaking out above that. So there was plenty of time to pick up that option here as well. But even if you picked it up here, you needed to make sure you had a good entry because, you'd be down in the position quite a bit, quite often. And oftentimes, your option would spike up in value and then just drop right back. These are the things with the weekly options because at every point, no matter where the stock is trading, people are reassessing if the stock will get to 220, and on the basis of that reassessment, they'll go ahead and price an option higher or price it lower. because again, this option expires Friday, the same day. So if this thing has no chance of getting above $220, so on all these pullbacks, on all these tank jobs, people are very quick to get out of this option, as you can see by all these wild rips and then subsequent tank jobs. Again, you see it all over the place. You see quick highs, and then all of a sudden, 50 cents all of a sudden just disappears out of your option. That's a lot when you're playing a weekly option. So to hold through a lot of this stuff is pretty difficult. So props to Joshua M1. Let's go ahead and show some numbers here. Let's do one for the small accounts. So let's say you wanted to play this with $1,000. So you got $1,000, and you want your option at 27. How many contracts do you have? Okay, so let's say you have 37 contracts. Alright, so let's take a look back at this option. You buy 27 and you say, okay, I'm going to sell exactly what Joshua did, and that's 91 cents. So you have your 37 contracts. Multiply that by your 91, and you get $3,067. So your profit equals 3,397 minus $1,000, and you get 23.97, and that is 200% on your money right there. Now again, there was potential for even more had he held. Instead of selling 91, actually, by the way, he sold 91 because he had some other shit to do and, had a meeting or whatever the hell it was. He would have held this thing, had he been sitting at the computer. So he had this big tank job when he didn't hit 220 initially. And again, you look back on this chart right here, when he couldn't break through 220. Remember, you're in a weekly option, so as soon as he couldn't do it here, stock tanks, 50 cents, 75 cents, people just start running for the hills in this option, which is exactly what happened. As you can see, you get almost a 40-cent pullback in this option. So these are really the crazy things with these weeklies. I mean, you see your chance to get out at 91 cents, and all of a sudden your option is down 40 cents. It's like, oh shit, what the hell do I do? Again, these are the things where you must have obviously conviction in your move. So let's take a look back down at this chart. After that tank job happened, he quickly just came back up and printed 221, and that's when the option went to a high of $1.67. So there was a lot more opportunity there. There was another 50 cents beyond where he sold from. So selling $1.50, selling $1.60, obviously your profit numbers here would be quite a lot higher. But anyways, 200% on your money, very good. Now, the total volume that was traded in this option actually was 22,000. Okay, so 22,000 contracts were traded. So there was opportunity, there was ample opportunity for you to collect however many contracts as you wanted. So instead of putting down the $1,000 as an investment, you could have put down 10,000, 20,000, 30,000, anything you could have amassed, you would have been able to do it. However, having the conviction that the move is going to happen, and having $50,000 in this, $100,000 in this, it gets kind of difficult. It gets kind of hairy because, at some points you're going to be down 20% of your position, 30% of your position. That's, $30,000 and so on and so forth. So, again, it gets kind of tricky and it gets kind of hairy. This was a very difficult trade to get because, as you can see on this chart, this is not easy. This crap is not easy to hold through. Not easy at all. It takes a lot of patience. And again, props to Joshua M1 for this one. So stay tuned for our next episode of Wall Street Porn. We'll be having these once a week. There's always something going on in the market. So thanks for watching, and make sure to check out the other videos. Thanks.